Over the last 1 year, gold has given a return of around 30%, which makes it one of the best performing asset classes of 2024. This week, when Diwali and Dhanteras is just around the corner, which according to our culture is considered an auspicious occasion to buy gold, this is a good time to explore the topic of gold investment in the UK. In this video, I will cover why should you consider investing in gold, what are the various ways to buy gold in the UK, and what is my preferred method of gold investing in the UK. Please watch this video till the end to know more on this topic. Hello and welcome to my channel. My name is Suman and I am a doctor working in the UK. On this YouTube channel, I share my own experiences of managing my own money as an NRI living in the UK. I am not a financial advisor, so this video should not be considered financial advice, and this is for educational purposes only. Here I am simply sharing my own experiences and learnings about investment in a very easy way. If you enjoy videos like this, then please hit the like button and consider subscribing to my channel for more videos like this. Why should we invest in gold as a part of our investment portfolio? The first reason is gold is considered to be an effective portfolio diversifier. It has low correlation with other asset classes like the equities, so it helps to reduce the volatility of our portfolio. This is the reason gold is considered a safe haven during uncertain times. For example, conflict or war, market correction, or some geopolitical uncertainty. Also, over the last 20 years, if we compare the charts of gold and S&P 500, then gold has outperformed S&P 500. The second reason why you should consider gold is that gold cannot be created by artificial means. So it is a fixed supply asset. Almost 80% of the Earth's gold is already in circulation, and around 20% still needs to be mined. Unlike our currency, the government cannot simply produce more and more of gold whenever they want. This is why gold is considered a store of value with an upward trend over the long term. The third reason for considering gold is that it provides a source of liquidity with no default risk. You can sell it whenever you want quite easily. So now we understand why adding some gold, approximately around 5 to 10% of your portfolio, makes sense. When looking to buy gold in the UK, you have several options, each with its advantages and consideration. Now let's explore each of these options in the later part of this video. The most tangible form of gold investment is acquiring gold in physical form, such as bars, coins, or jewelry. This type of investment is appraised based on the gold's weight and purity. You can buy physical gold online through some online platforms like Royal Mint, Bullion Vault, and platforms like Minted. Most of these platforms will charge some fees and commissions, so be aware of them before you start investing with them. Minted is an online platform that allows you to invest in physical gold via its website or mobile app. Please do check out the link below if you want to download the app and start buying physical gold or even silver. You can either have the gold delivered to you or you can choose to store it at one of their vaults, both of which will incur some fees. Here, either you can make a one-off lump sum investment or you can even do monthly regular investment. An important thing to consider in gold investment is the margin price. Minted charge you above the daily spot rate of gold, and it is usually around 5 to 10% for one-off purchase and around 7 to 9% for monthly plan. There is also commission fee while selling the gold, which is usually around 1.5%. You will also need to consider the storage fee. You might get some promotional offer which will give you 6 to 12 months free at the beginning, but after that, this storage fee will kick in. If you want the physical gold to be delivered to you by post, then you have to add the cost of the postage as well. If you are interested in buying gold bar or coins, then you may consider the Royal Mint website. Here you will also have to pay commission and storage fee. Another option of buying gold is Bullion Vault, which is a website where you can buy gold coins and bars, and there are storage costs involved in this as well. Because of all of these fees and various margins during transaction and cost of storage of physical gold, it is not the most cost efficient way of buying and storing gold. Another important factor to consider here is the capital gains tax when you are selling the gold and making profit on that. To avoid paying this capital gains tax, one of the strategies that you can use is to buy gold coins or collectibles. Beyond investment grade bullion coins, you can also buy physical gold in form of coins or collectibles. These items appeal to collectors and investors, offering value transcending their gold content. Factors such as rarity, craftsmanship, design, and historical import play a significant role in determining their worth, making them a distinct category of gold investment. Some of these gold coins are treated as British legal tender, so they are exempt from capital gains tax. Therefore, gold Britannia coins, silver Britannia coins, and gold sovereigns are all capital gains tax free. Other coins made by the Royal Mint, such as the Tudor Beast and Royal Arms, these coins are also capital gains tax free. So, all profit realized on this investment, regardless of the quantity or value, is tax free. This is particularly relevant now as the Labour government might increase the capital gains tax in the upcoming October budget. For those inclined towards a less physical form of investment, gold exchange traded fund or ETFs or shares in gold mining companies provide an alternative route to invest in gold. These options allow investors to engage with the gold market through the stock exchange, offering different risks and opportunities than owning gold outright. This can be held within our ISA account in the UK, so making it tax efficient. Here are some of the examples of gold ETF which you can purchase through your investment platforms in the UK. Nowadays, gold ETFs are becoming more and more popular amongst investors who are interested in investing their money in gold. One of the advantages through the ETF route is that you can invest in products which are backed by physical gold. Also, the price of ETF is quite consistent. ETFs in general provide a low cost option of investing in gold, and the charges usually is around 0.12 to 0.13%. As I already mentioned, that ETF route can be held within your ISA account, so this can be a tax efficient way of investing in gold. Some investors prefer to invest in gold miners, that is the company who mine gold, to play out this investment theme. You can also buy shares of gold mining companies within your ISA to invest in gold. Be aware that you are exposed to various business risks of the company, so you need to study about the company before you decide to invest in this. One of the advantages in this option is that this company will pay you some dividend, so that could be a regular source of income if that's what you are looking for. Okay, so we have discussed about all the possible options of investing in gold in the UK. Now, out of all of these options, my preferred option is investing within my ISA account, and I invest in iShares physical gold ETF. This ETF forms around 5% of my overall portfolio, and I do every weekly investment through the regular savings plan on InvestEngine platform. As of now, I have made a profit of 13.7% on my gold investment. I prefer ETFs because here I don't need to worry about the storage cost, buying and selling cost of this product. I can buy and sell whenever I want, and the profit will be tax free within my ISA wrapper. Also, I prefer to invest a small amount every week so that I can achieve pound cost averaging. I have shared the details of my ISA portfolio in the description box below for you to check it out. Also, if you want to see what other holdings I have in my InvestEngine portfolio apart from gold, then please watch this video next. Thank you for watching. See you next time.